viewers and subscribers. It's your girl Star Flames. In this video, we're going to talk about the Daily Fail chiming into Ye and Bianca's mortgage. You know, when Ye and Bianca does anything, it is so weird. It is taboo. Oh my God, they've just committed a crime. Oh my God, I can't believe Kanye and Bianca is actually leaving. But when Kim, Khloe, and Courtney, Kendall, and Kylie does it, Kendall's stuns and took out over a whopping. When Khloe does it, OMG, Khloe just ranked up her estate with $100 million loan. But when Kanye and Bianca does it, the Daily Mail says Kanye West and biancacensori take out risky loan to buy a $35 million Beverly Hills mansion, but they won't be calling it home. Listen, if they're joining the game of how to lower their taxes just like everyone else, what's the problem? What's the problem? Now, let's get into this report because we're going to go through it, onto a fine tooth comb. No, they're saying that Kanye West raided his pension pot and used high-risk mortgage lenders to fund a $35 million Beverly Hills mansion, a property he does not intend to live in with his wife Biancacensori, DailyMail.com can exclusively reveal. So, what if he doesn't plan to live there? And how did you guys know that he raided his pension pot? Is it that the bank that he's saving with is, violating his private information? But then again, if you know, it's a Daily Fail, so who knows how they obtain this information? They will do anything. They have always violated this man's rights and privacy, right? Now let's continue. They're saying that the rapper 47 and his wife 29 borrowed a total of $15.5 million. DailyMail.com can reveal, including a $2.7 million loan from a fitness entrepreneur. The couple closed on the home with 11 bedrooms, 18 bathrooms in the Uber exclusive Beverly Park gated last month. Neighbors include Adele and Justin Bieber. And also, guys, I did a video of Bianca, shopping, buying her pots and pans for her new home. But even if you've forked out this money for his wife, there's nothing wrong with that. He always ensures that his women are taken care of. That's what the media, and this is how they slip up oftentimes. They tell us in one report that he's a horrible person, and then in the next report, they try to make him look stupid, like, oh, he just took out this hefty mortgage and he has no plans to live there. It all belongs to Bianca. Like, make it make sense, right? Now, let's continue. They're saying, but the property, jointly owned with his wife, Biancacensori, through their Firmshore Drive Holdings LLC, was purchased purely for investment purposes and will likely be rented out. No, this is interesting because do you guys remember TMZ? After you bought the property, TMZ went into the neighborhood and they're like, Kanye made this post on Instagram. He said he's going to tear this down. He's going to build a city. What do you guys think? So TMZ went in there and they started trouble for Ye. But now, Daily Fail is saying Kanye West has no intention of living there. Do you see how they play with this man's life? Well, let's continue, shall we? Now, they're saying Kanye had to use various lenders to finance the purchase, including a private money lender whose motto is, when the bank says no, private money is the only way to go. They're upping this man's business like he's keeping a dance. I kid you not. I absolutely kid you not. Now, they're saying the deal also involved a firm that offers risky mortgages to people who wouldn't qualify for one based on their credit history and score. It's because he has been blackballed. Shut up. Now, they're also saying the largest loan amount was $12.5 million with Lone Oak Fund and its investment arm, Lone Oak Industries. Lone Oak offers bridging loans for investment properties, a loan that provides immediate cash flow by using short-term finances until person or company secures permanent fund. Now, They're trying to make his credit score look bad, but if his credit score was so bad as they want us to believe, these loans company would not be lending him the loan, because even the loans company for mortgages, etc., they do credit checks. Okay, so I mean, why is it that they consistently try to prove something about this man's life that is not factual, right? But let's continue with the report. Okay, so they're saying that, Lone Oak's offering, we went through that. Kanye signed an assignment of rents and leases, trust deeds, which means that if he defaults on the mortgage, the lender can take profit from any future rent. So that's a good deal. So, he's really covering his ass here. No, they also say that he's also taken a further 3 million mortgage from two sources, RGGL LLC and pension firm Provident Trust Group. RGGL is owned by Richard and Lucy Glassman, fitness entrepreneur who lived in Albuquerque, New Mexico. They ended over 2,693,000 using their private broker private money solution. You know what is coming to mind? I'm wondering if he is about to file for bankruptcy. I'm wondering if he's intentionally putting himself in these situations so that he files for bankruptcy, because he knows that that man, Ari Emanuel, may or may not be sending people after him to sue him. And he's using this move as to file for bankruptcy to keep those people off his tail. It could be very well what Ye is doing. It could be. I get the sense that Ye might be filing for bankruptcy soon. But let's keep our eyes peeled to see if he does that. Let's see what happens. So we're going to continue with this report. Now, they're saying that the Glassmen have no connections to Kanye personally, but Richard told DailyMail.com why he got involved in the deal where Kanye still had to front $19.5 million of his cash to fund the purchase, totaling 55% of the asking price. Kanye has good money, and people knows that he's good when it comes to loans, So they're going to lend him the money, and they know they have a property that is secure and that they can always take back. No, they're saying when you have a total of 40% loan to value, it's a good investment. This is the great creativity of the broker. It's not the creativity of Kanye West. Kanye do all the due diligence. I'm just the little guy, Richard explained. To be totally honest, sometimes when investors look at celebrities, they don't want to do it. Well, it definitely is, because if they don't pay, we get a $35 million property, but we would prefer they just pay. We don't want to hurt nobody. We're just investors. We want to get a return on our money. The couple have bought numerous properties in California and New Mexico. Richard owned 8 gyms in New Mexico as part of Planet Fitness franchise before selling them off, according to public records. He's linked to other fitness firms with wife Lucy. The investors surmised that Kanye was able to raise the $19.5 million by using the capital he received when he recently sold his rotting Malibu home in September. The media is a trip. No one is going to buy a rotten home. My God. They're saying that Richard said he just sold a $57 million property for $21 million. What happened was he took the $21 million to buy this property. So we financed the difference. He didn't want to use his cash. It's not like he lives in this property. No, he's making smart moves though. He is making smart moves irrespective of what they may think. He's making smart moves. No, they're saying, the guy got tons of properties. I guess properties to him are like you and I would have a car or a watch or a pair of pants. Kanye does still have a lot of good properties. Now they're saying that Kanye West additionally borrowed $307,000 against a cash balance pension plan with a Provident Trust Group, which a financial expert claimed could be from the rapper's retirement fund. The loan from RGGL and Provident Trust Group were wrapped up in one $3 million mortgage contract and arranged by PMS. The mortgage trustee is California TD specialist based on Anaheim Hills, who are experts at finalizing complex real estate deals. They are also an arm of FCI Services, which is on their website, claims to be a leading national non-QM and private money servicer. Non-QM loans are aimed at borrowers who don't meet the usual criteria to buy a home and don't qualify for conventional financing. Kanye signed the $12.5 million and a $3 million loan agreement under the official name Ye on October 16th. This was able to happen while the rapper was in Tokyo due to using notary under Richard Smith, who is registered in Virginia. So Richard Smith did the transaction for him. Doug Perry is the strategic financing advisor at the Real Estate Bees, who provided an analysis of Kanye's borrowing. No, they're saying that Perry says that while Kanye put in a substantial $19.5 million down payment, his home loans are huge and come with risk. Perry says there aren't many lenders that make loans that large. The risk is simply too great. Kanye's first mortgage is from Lone Oak, a recognized business purpose commercial lender in California market. They do not lend on owner-occupied property and typically make bridge loans for 12 months with rates in the 8.5 to 10% range, requiring interest-only payments during the loan term. There is most likely a second mortgage because the first mortgage lender did not want to lend the entire loan amount due to the risk of loaning one person or entity that much money. Perry explained why he believes some of the funds have come from Kanye's pension, adding, I think it is possible the source of the $3 million is Kanye West's retirement account. The company on the document, Provident Trust, is a firm that focuses on self-directed retirement accounts, and there's a specific account number on the recorded beneficiary document. So it is likely Kanye borrowed from his own retirement for that part of the loan. What if he did? No, they're saying Kanye also has a 6-bedroom mansion in Calabasas, which he bought for $2.2 million in May. His property portfolio includes 2 rental apartments in Calabasas and Thousand Oaks, which cost $1.6 million and $575,000. Now, guys, let's see if we're missing anything here because I want to give you guys all the information of borrowing. Okay, so I think that we have, covered everything. No, I see that many people, may think that this is a little bit of splurging and all of that. But, Ye has taken some risk with real estate, and majority of the risk has paid off so far. Over the years, he has done it quite a lot, and many of it has paid off. While, there are cases, it's just life. Sometimes you gamble, you win. Sometimes you gamble, you lose. Sometimes you break even. I'm also theorizing that Kanye West could be potentially tying up himself in these loans so as to file for bankruptcy. And if he files for bankruptcy, it means that the people who are suing him, it would not make any sense because already they're saying that, his credit score is not good and all of that. But we know that even if his credit score was good, they would still, not give him a loan because of the entire blacklisting that is around him, because he has been blacklisted. As you guys know, it's not a if, it's not a but, it's not a maybe. Okay, so that's it. That's all I have to share as it relates to Ye and the mortgage. I'm going to do a side-by-side comparison in this video to show you how they talk about Kim but getting a mortgage versus how they talk about Ye doing it. So stay tuned for more videos coming up also after this. And thanks for your time. See you guys later. Bye, guys.